Bitcoin on the edge of a massive move. Are we going to crash down to 78,000 caught in a liquidation trap? Or are we blasting to 200,000? Stick around as we uncover the signals and why this could be your next big opportunity to get involved in Bitcoin, crypto crew. Welcome back. It's Tom here, your boy, giving you the hottest in all Bitcoin and crypto action. Make sure you give us a like. Hit subscribe if you haven't already, and make sure you come on over to X. Follow us on X, where we talk about Bitcoin and crypto all day, every day. All right, it's been a wild ride. We've been flirting with the top, and today we're going to be breaking down the charts, the indicators, the market traps. We got bearish divergence on the 4-hour chart, a possible double top. We got a liquidation map that's screaming a little bit of volatility. We got clues pointing to major breakouts, a potential 200,000 Bitcoin, $200,000 price Bitcoin. Plus, we're going to tie it into gold and its all-time highs and the dollar weaknesses that we've been seeing in the marketplace. So let's jump right in. Let's get over to the 4-hour chart, okay? I know you guys like to zoom in on the smaller time frames, and the first on the 4-hour chart, things are getting juicy. We're seeing a bearish divergence on the RSI. Now, what does that mean? Well, the price is attempting to make higher highs. It has not been able to get through that 88,000 level, 9,000 level that we've been talking about. So right now it's flashing us a warning sign, because as we're making slightly higher highs, but the indicator is basically going the opposite direction, showing lower highs, hinting at weakening momentum. Okay. Now, this often leads to pullbacks. So, traders, short term traders, the guys that enjoy the party dance near the door, are actually paying really, really close attention to this. We're also seeing that potential double top right here. It has not been confirmed. Like I said, it hasn't been confirmed yet. But if we break below the key support of, say, 83,500, the drop could be fast. Could be fast, potentially hitting as low as 78 to 80,000. But don't panic. Don't panic. This zone is could and is, in my opinion, a great buying opportunity. It's aligning with a 50% Fibonacci retracement of past support. We'll get into that in another video. But if you don't use Fibonacci levels, we'll definitely get into that. On the flip side, if Bitcoin on the short run can get above that 91,000 that we've been talking about, we've been we've been talking about that level for a while now, and I want to make sure that you're just cognizant of that as well, because the market's asleep right now. But right there, 91,000 is the breakout that we need to just get this party going, man, to start trading into upper levels. So keep your eyes on that 91,000 resistance. Also keep your eyes on that, this 83,000 dollar level, right? Because we could push down to lower levels. But again, like I said, don't panic. So let's zoom out, and we're going to just show you that everything's intact, okay? Everything's intact right here. The structure is solid. It's following a classic pattern, the retest pattern that we've been talking about. Marketplace makes a high, comes back down, comes back up, finally breaks through that high. And what does it do? It retests. It retests just like it did over here. It retested over on this level. This was the old resistance that then became support, and the marketplace actually rallied up from that. So it's all normal. Everything is still looking good. The bull run is still in place. So now here's the banger. Let's check out the gold chart. Okay, let's go on over to gold, and I want to show you on this chart right here. Bitcoin tends to explode higher every time gold makes new highs. It's happened twice before. It's happening again. Gold's smashing records, and liquidity is pumping. I want to come back over to this chart. I want to just pull up and show you the global liquidity right there. Okay, liquidity is pumping. Now, we said this before. Some analysts are calling for 200,000 Bitcoin by late 2025, early 26. Wild, right? But the charts don't lie. So, it takes some time for the liquidity to actually enter this marketplace. And with gold showing the way, like we were saying, we wanted Bitcoin to actually break away from gold, but we said in yesterday's video, which is really important to note, that gold's been around forever. Bitcoin hasn't. So marketplace takes a long time to break old habits. But we're on our way to doing it. So I also want to show you one other point too before we just move on out, and I'm going to make sure that I hit this. Let's look at the EMA ribbons right here. Okay, when we pull up the EMA ribbons, like we're well within, we're actually coming into that support. So it's kind of confirming that the marketplace could dip down to that 72,000 perhaps. I don't think it's happening right now, but long term, because this is a weekly index, we could see that, but we're well within the bulls being in charge if we're using the EMA ribbons, which are a very, very good indicator. So where are we right now? Let's get into let's look at CoinGlass. Okay, this is really important as well. All right. CoinGlass liquidation heat maps is screaming action. Okay. We're seeing heavy long positions stacked around 85 to 90,000. We haven't been able to get through that yet. Uh, Now, this is where we're talking about. If the market dips to, below that 83, we could liquidate some longs, triggering a fast drop to 78 to 80,000. But here's the twist. It could be the trap to shake out weak hands and trap the shorts. If shorts pile in expecting a crash, a quick reversal could send Bitcoin ripping vertical, squeezing them out. So don't get shaken out. Stay sharp, okay? Stay sharp. We're well within our way of like screaming past that 91,000, but we just got to be on toes, okay? So stay sharp and watch for a bounce if we get down to that lovely level of say 80,000. Now, if we come on over and we look at the dollar index, All right. Dollar weakness means Bitcoin strength. And right now, the dollar is showing signs of softening. Historically, when the dollar index drops, Bitcoin and other crypto assets trend really and rally really hard. Now, we also have in the background global trade tensions and a potential dollar pullback. This could be the massive tailwind for the next Bitcoin leg up. Also, you know, we have also the Fed is going to be forced to lower rates. Okay, we got inflation that's really extremely low right now. Things are working pretty well in the U.S. economy, and of course, Trump wants him to lower rates. So we got that working in the background. See our X post about that. We posted up on X. So, big picture. Global liquidity is exploding, as we showed you in, I believe, this chart. Did I get lucky? No, I didn't. Right here, global liquidity is exploding. Sets up for a massive move in Q2 2025. The stock market correction has dragged us down a bit, but a counter trend reversal in stocks could flip Bitcoin bullish, big time bullish again. Again, it's that 91,000 that we need to break. Dollar weakening, investors are going to look for alpha. They're going to pour into riskier assets like Bitcoin. We got the EMA ribbons, working for us. Everything's in place. Now, before we wrap things up, and I want to give a quick shout out to our preferred broker, CoinW. Just, check out the link in the description below. Click on it if you're interested in trading smarter today. All right. So anyway, so what's the play, crew? What is the play? Are we going to drop to 78,000, 80,000 for a quick liquidation flush? That's your dip to buy strong support with the prime risk reward setup. Watch the heat maps for some other potential information coming to you live, because those heat maps are updated live. Long-term weekly gold chart and Bitcoin showing, wow, we're on the move up. Gold is up. If we break that 91,000, hop on the breakout and aim for 100 plus. Long term, the weekly chart with the gold right there that we've been talking about right here is showing that the macro signs are in alignment. But always manage risk, set your stop losses, and don't YOLO your portfolio. All right, so let's break it down. I'm going to ask you, are we hitting 78,000 caught in a short squeeze, or when are we going to moon to 200,000? Put your predictions in the comments below. Make sure you smash that like button, hit subscribe. Remember, always, 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 okay, trade with your head not over it. Don't risk the rent money. Do your own research. And if you're that short-term trader looking to catch that quick move down and back up, enjoy the party. but dance near the door. Cheers.